Hey everyone, and welcome back to CoinTalk Podcast on YouTube. Today, we're doing a deep dive into the world of stablecoins.
Okay.
Specifically, Tether USDT.
Right.
And some recent comments from its CEO, Paolo Ardoino.
Yeah.
You've sent over some articles about the increasing competition in the stablecoin space and Tether's response, or should I say lack of response. What really caught my eye is how confident Ardoino seems, even with some serious challenges popping up.
Right.
Is this a sign of strength, or is he overlooking some real threats?
Yeah, I know.
That's what we're here to figure out today.
What's fascinating here is that we're seeing these two seemingly contradictory things happening at the same time. On the one hand, Tether is facing some regulatory hurdles in Europe,
Right.
thanks to the EU's new markets and crypto assets regulations, or MiCA.
Yeah.
And its market cap has shrunk quite a bit recently, yet Ardoino is projecting this unwavering confidence.
Okay.
It definitely raises some questions about whether his optimism is truly justified.
Let's unpack that a bit further for our viewers on CoinTalk Podcast.
Sure.
So first things first, why are stablecoins such a big deal in the crypto world?
Well, you can think of stablecoins like a bridge between the wild west of crypto and the traditional financial system.
Okay.
They offer the benefits of crypto, like fast transactions and borderless transfers, but without the crazy price swings that can make crypto so volatile.
So it's like having a piece of the crypto pie
Yeah.
without the risk of getting a stomachache.
Exactly. And that stability is what makes them so useful for trading, storing value, and even making everyday purchases.
Okay.
Now, Tether, or USDT, has been the dominant stablecoin for quite some time.
Right.
It's the largest by market cap, meaning it holds the biggest chunk of the stablecoin market.
Which makes Arduino's confidence even more interesting, right?
Mm.
I mean, if you're the top dog, wouldn't you be at least a little concerned about these new challenges?
Yeah.
Especially with those MiCA regulations coming into play.
You would think so, wouldn't you?
Yeah.
But at the Plan B Forum in El Salvador,
Okay.
Arduino basically shrugged off concerns about stablecoin competition.
Really?
He pointed to Tether's widest digital and physical distribution network, which he says took a decade to build.
Wow.
He argues that this network gives Tether a huge advantage, especially when it comes to reaching those 400 million users in emerging markets.
So he's saying Tether's not just another stablecoin.
Right.
It's a global financial network, especially for those who don't have access to traditional banking.
That's his main argument.
Okay.
And he's not shy about contrasting Tether's approach with some of its competitors who rely heavily on investor capital and traditional banking incentives. He's basically saying, we're built differently.
And to drive that point home, he also mentioned that Tether supports the U.S. economy by investing in U.S. treasuries.
Interesting.
It's an interesting take, almost like he's saying, hey, we're actually helping to strengthen the very systems some people think we're trying to disrupt.
It's a bold claim, for sure.
Yeah.
But it does raise an important question for our viewers here at CoinTalk Podcast. Is this confidence justified, or is he missing the bigger picture?
Right.
The EU regulations, for example, could significantly impact Tether's growth in Europe, and it's not like the competition is standing still.
Right. There are plenty of other players out there who are actively innovating and trying to grab a bigger slice of that stablecoin pie.
Exactly.
So you have to wonder, can Tether maintain its dominance if it doesn't adapt?
That's the key question, and it's something we'll explore further in this deep dive on CoinTalk Podcast.
Stick with us as we unpack this further and analyze whether Arduino's confidence is well placed or just wishful thinking.
Right.
You won't want to miss this, so make sure you're subscribed to CoinTalk Podcast on YouTube and hit that notification bell so you don't miss out on future episodes.
We'll be diving into the world of algorithmic stablecoins and how they're shaking things up.
Okay.
And then we'll wrap things up by looking at what all this means for the future of USDT and the stablecoin space as a whole. You know, it's interesting to think about Tether's position in the market. They've been around for a while. They have this massive network, but does that automatically guarantee their future success?
That's a great question, and one that a lot of folks here on CoinTalk Podcast are probably wondering about.
Yeah.
I mean, the crypto space is all about innovation, right? New technologies, new approaches.
Right.
It seems like things change at lightning speed.
Absolutely. And that's why it's important to look beyond just market cap and network size. We need to consider the pace of innovation and how Tether is responding to these new trends. One of the biggest developments in the stablecoin world is the rise of algorithmic stablecoins.
Okay, let's break that down for our viewers who might not be familiar with the term.
Sure.
Algorithmic stablecoins. What are we talking about here?
Imagine a stablecoin that maintains its peg to the dollar, not through reserves, but through algorithms and smart contracts.
Okay.
Essentially, these algorithms automatically adjust the supply of the stablecoin to keep its price stable. It's like having a self-correcting mechanism built right into the code.
So it's like a stablecoin on autopilot. Sounds pretty futuristic.
It is, and this approach is attracting a lot of attention because it offers some potential advantages over traditional reserve-backed stablecoins like Tether.
Okay.
For example, algorithmic stablecoins can be more efficient and transparent since they don't rely on centralized entities to manage reserves.
But wouldn't that also make them riskier?
Hmm.
I mean, if it's all based on algorithms, what happens if something goes wrong with the code?
That's a valid concern. Algorithmic stablecoins are still a relatively new concept,
Right.
and there are definitely risks involved.
Okay.
We've already seen some high-profile examples of algorithmic stablecoins failing to maintain their peg, which can lead to significant losses for investors. But that hasn't stopped the innovation in this space.
And it highlights why it's so important to stay informed and do your research before investing in any cryptocurrency.
Right.
Whether it's a stablecoin or something else. That's why we do these deep dives here on CoinTalk Podcast.
Exactly. Now, in addition to algorithmic stablecoins,
Right.
we're also seeing stablecoins that are backed by a basket of assets rather than just a single currency like the US dollar.
So instead of putting all their eggs in one basket,
Yes.
they're spreading the risks, so to speak.
Precisely. This diversification can offer greater stability, especially in times of market volatility.
Okay.
If one asset in the basket loses value, the other assets can help to offset the loss. It's a more nuanced approach to maintaining price stability.
So we've got these new types of stablecoins emerging.
Right.
And then you have the EU's MiCA regulations, which you mentioned earlier.
Yeah.
It seems like Tether is facing pressure from multiple directions.
Absolutely. And this brings us back to that central question.
Okay.
Can Tether maintain its dominance in this rapidly evolving landscape?
Right.
To answer that, we need to look at how Tether is responding to these challenges. Are they adapting? Are they innovating? Or are they simply relying on their existing network and hoping for the best?
Arduino seems pretty confident, but actions speak louder than words.
True.
So far, we haven't seen any major announcements from Tether about new strategies or partnerships. Maybe they're working on something behind the scenes,
Yeah.
but if they want to stay ahead of the curve, they need to show that they're willing to evolve.
And that's a crucial point for our viewers on CoinTalk Podcast. Sometimes the biggest threat to a company's success isn't competition, but complacency.
Okay.
If Tether becomes too comfortable with its current position, it risks being overtaken by more agile and innovative competitors. This is especially true in a dynamic space like crypto, where change is the only constant.
It's like that saying, adapt or die. And I think that applies even more so in the crypto world.
Right.
Now let's shift gears a bit and talk about those MiCA regulations.
Yeah.
What exactly are they and what kind of impact could they have on Tether?
These regulations are all about bringing more transparency and stability to the crypto market in Europe.
Okay.
They cover a wide range of areas, including stablecoins. For Tether, the most significant aspect of MiCA is the requirement to hold reserves that are equivalent to the value of the stablecoins in circulation.
So they need to have enough assets on hand to back up all those USDT tokens out there.
Exactly. And these reserves need to be held in highly liquid assets like cash or short-term government bonds.
Yep.
The goal is to ensure that stablecoin issuers can meet their obligations and prevent a situation where a stablecoin loses its peg due to a lack of reserves.
That sounds like it could be a bit of a headache for Tether, especially given the questions surrounding the composition of their reserves in the past.
It certainly adds another layer of complexity for them.
Yep.
They need to demonstrate to regulators that their reserves are transparent, well managed, and meet the new regulatory requirements.
Yeah, and if they don't comply.
Well, that could lead to fines, restrictions on their operations, or even a ban on USDT in certain European countries.
So the stakes are pretty high for Tether.
Absolutely.
Good.
The EU is a major market for crypto, so these regulations could have a significant impact on Tether's growth trajectory, not just in Europe, but globally.
It sounds like Arduino might want to reconsider that "I'm not worried" statement.
He might.
But let's not jump to conclusions just yet. There's
Yeah.
still a lot to unpack here.
Yeah.
Make sure you're subscribed to CoinTalk Podcast on YouTube and hit that notification bell so you don't miss the rest of this deep dive as we explore whether Tether can truly weather this storm or if it needs a serious course correction.
You know, one of the things that stood out to me from those articles you sent over was how Arduino emphasized Tether's reach in emerging markets.
Right.
He made it sound like Tether is almost single-handedly providing financial access to millions of people who are excluded from traditional banking systems. It's a compelling story, but I can't help but wonder if it's a bit oversimplified.
It's an important point to consider. While Tether has undoubtedly made inroads in these regions, it's crucial to look at the bigger picture.
Okay.
There are other factors at play that are driving the adoption of stablecoins.
Right.
And Tether isn't the only player in the game. So what are some of these other factors? I mean, why are stablecoins in general becoming so popular in emerging markets?
Well, think about the economic realities in many of these countries.
Okay.
You have high inflation, volatile currencies,
Right.
and a lack of trust in traditional financial institutions.
Yeah.
For many people, stablecoins offer a more stable and accessible way to store and transfer value.
Yeah.
They're also a hedge against inflation, which can erode the value of local currencies.
It makes sense. If your local currency is losing value rapidly, a stablecoin pegged to the US dollar starts to look pretty attractive.
Exactly. And then you have the issue of remittances.
Remittances, right?
Stablecoins can make it easier and cheaper for people working abroad to send money back home to their families.
Okay.
Traditional remittance services can be slow, expensive, and often involve a lot of paperwork. Stablecoins offer a more streamlined and cost-effective alternative.
So it's not just about Tether, it's about the unique value proposition that stablecoins offer in these specific contexts.
Precisely. And it's worth noting that there are other stablecoins vying for market share in these regions,
Right.
as well as local initiatives and even government-backed digital currencies. It's a dynamic and competitive landscape.
It sounds like Tether is facing a two-pronged challenge here. They're dealing with increased competition from other stablecoin issuers and the potential disruption from government-backed digital currencies.
Yeah.
It makes you wonder if Arduino's confidence is misplaced.
It's certainly a lot to juggle, but, one of the things that has always made crypto so fascinating is its ability to adapt and evolve. Who knows what the future holds? Maybe Tether will find a way to innovate and stay ahead of the curve.
Yeah.
Or maybe we'll see a completely new player emerge and dominate the stablecoin market.
Only time will tell. But one thing's for sure, the stablecoin saga is far from over, and something we'll continue to follow closely here on CoinTalk Podcast. In the meantime, I want to hear from our viewers. What do you think about the future of Tether? Do you think they can maintain their dominance, or are their days numbered? Head over to the comments section on our YouTube channel and share your thoughts.
And while you're there, don't forget to subscribe to CoinTalk Podcast on YouTube and hit that notification bell so you don't miss out on any future episodes. We've got some exciting deep dives planned, covering everything from the latest trends in DeFi to the regulatory landscape for crypto.
We appreciate you joining us on this deep dive into the world of Tether and stablecoins. Until next time, stay curious and keep exploring the fascinating world of crypto.